Most of it on 34th Street, right?
Correct.
I mean, that's
That's
by
the
far the
flagship.
largest single asset.
So they own that, and that's where the value has been considered here. I do wonder if it sets up for a bit of a bidding war, given that $5.8 billion price sitting on so much real estate. If there's interest, there's been interest before. I think Starboard was looking at this back
Starboard many years ago,
Yeah.
and it wasn't a great pick for them. Jeff Smith had talked specifically about the real estate value and specifically, of course, about 34th Street, the giant flagship store there, what it was worth on its own. But frankly, none of that came to pass in terms of doing some sort of transaction to try to realize that value at that point.
They've tried to turn around the fundamental business, Jeff Gannett. They've had some success. I mean, it's not like some analysts like this stock, but it's a shell of where it used to be, both in terms of the number of stores and the sales that it's had. I mean, it's a challenge industry for sure.
Well, department stores are tough because, as Citi says this morning, it's where companies sell other people's stuff. And in a world of e-commerce, that gets it's difficult to do that model. Citi does point out they have done, as you say, some monetization of real estate, but there's probably more to be done, whether it's Herald Square or Chicago. But it's hard to comment given that we don't know whether financing's been lined up, and certainly no comment from the company.
Yeah, I'm afraid I don't have anything to add to that as well beyond our own reporting here that CNBC.com has done as well. Listen, interest from parties in terms of the real estate value of retailers is not new, whether it's Hudson Bay or whether it goes back to Steve Roth and Vornado, which started with the big purchase of Alexander's. Some of our viewers may remember that store. This is a theme that's gone on for many years. We'll see whether Macy's has any interest in that potential deal. And to your point, very important whether they have all the financing they need to get it done.
And we'll get to Oxy.
Yeah.
Crown Rock not even done.
No. That was, big headline, but a lot of that is debt. Over $9 billion in debt. We're talking about Oxy's deal to acquire Crown Rock. Again, it's a Permian deal, though. A lot been going on there, obviously. Hess and PDD being the largest of them. Pioneer.
Yeah, Vicky Hollab on Squawk this morning.
Yeah.
Still to come this morning, TD Cowen names Delta one of its top picks for 24. We're going to talk to the analyst behind that call. Take a look at the pre-market. As Sarah said, very busy week on tap. Not just the central banks and eco data, but quad witching and an S&P rebalance on Friday. Futures pretty flat. Back in a minute.
Good morning, everyone. Hope everybody had a really good weekend. Today I'm a little under the weather, so I'm not gonna stay on until 11 as usually. So I'll be jumping off at 10:30. Gonna see what this market offers this morning. Yeah, pre-market's a bit slow. So I know some of you guys, depending on who you broker with, you're seeing a massive 50-point gap, and that is due to the contract rollover. All right. The current contract that Thinkorswim and other firms have switched over to is going to be ESH24 or NQH24. The previous contract, it's ES or NQ or YMZ23, right? These contracts expire in 4 days on the 15th. Are you trading the new cons? Yes. I've switched over. I traded it on Friday. So again, if we go over, we see that new contracts are in play. The previous contracts expires in 4 days. So do be sure to make that switch if your platform doesn't make that switch for you.
It's an international business. They're going to grow in the Atlantic by about 6%, and they have quite a lot with their alliance partners. Their Sky Team alliance partners. They have France, KLM, and Virgin Atlantic. So that gives them exposure, really from France and Amsterdam and London, almost the rest of the world. Maybe people couldn't access from the U.S. And then on the on corporate, so here's how we think about corporate. Air quotes around everybody talks about corporate not coming back, but pragmatically, the U.S. economy has grown quite a lot in the past 4 years, and so what managed travel will come back has come back. What really hasn't come back that I think people are forgetting is that one-day trip. And eventually, when people can trust the industry again, it will come back.
It sounds like that's where you think loyalty may fold in, yeah?
Exactly. Delta has already a very good group of loyal customers. And as the American Express card becomes accepted in more locations, we think they'll be able to pick up additional credit card holders. And it's proven by really all the airlines that if you have a credit card, you're more loyal.
So what's with the stocks, Helene? I mean, they're barely up year to date. They haven't been that great. I guess there are worries about demand continuing and whether we've seen the bulk of it, especially if we're heading into a slower period or even a recession. They've got high debt loads coming out of COVID and high interest rates. And these are just some of the bare reasons against your call, right?
Yeah, those are really good bare reasons too. Thanks, Sarah, for pointing them out. So here's how we think about that. To your point, as it relates to Delta specifically, our view is that Delta is actually in a pretty good place with respect to its balance sheet. Its goal is to get net debt down to $15.15 billion, which would make it among the best of the big four airlines, maybe second to Southwest. And then getting back investment grade credit, which would mean their borrowing costs would be more attractive. They're one notch below IG right now. So that's something that would be a catalyst for the shares next year. And then the other points that you make with respect to a potential recession, our view is that we've seen the decline in domestic. It's not growing as fast as it had been, and fares are already off their highs, which were unsustainable anyway. And we think that in the Atlantic, certainly, airfares next summer will be lower than they were this summer, not because the U.S. airlines are growing that much, but because the European airlines, which undergrew in 2023, are now upping their capacity. So it's better for Delta to do that expansion. It's mid-single digits at 6%, and allow their partners to grow with their own metal. Delta still gets the benefit of their joint venture.
That's interesting. Next time, Elaine, we'll talk some labor and maybe attempts by the rest of the industry to consolidate. It's great to see you, Elaine Becker.
Good to see you.
TD Cowen. Speaking of Delta and the airlines, don't miss our exclusive with Delta's Ed Bastian today, 10 a.m. Eastern Time. A lot to talk with him about.
Taking another look at futures here as we count you down to the opening bell. Again, coming off of 6 straight weeks of gains. Looks like we're open for except for an unchanged open right now, ahead of a lot of key events this week, including the Federal Reserve meeting on Wednesday. More Squawk on the Street when we come right back.
Yeah, I'm looking for shorts. I don't think the gap is going to fill all today. I think that we're probably gonna get this gap fill for the FMOC tomorrow, right? So I think that's when we're gonna get the gap fill, but we'll see how that plays out. Mm. Where? Uh, I'd like to see a candle close below 46.52 for a movement down possibly to 46.37. The market has had like a crazy run up the last few weeks, so I'm just looking to see if we do some sort of retracement. And again, we have this gap, and then we do have a gap further to the downside. So let me see. I'm gonna have to look for it because since the contract rollover, it changed, but down in the low 14,000s. So 5 minutes to go. Things are looking good so far. Mm. Da, 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 da. Don't think I'm gonna get my ZL buy, so I might as well just cancel this puppy. So, for those of you guys just now joining in, I'm a bit under the weather today, so I'm not gonna stream uh, until 11. I'm gonna be jumping off at 10:30. I honestly didn't even want to hop on this morning, but I told you guys I would be here on Monday, so here I am. Thank you, thank you. I'm over here downing some ginger and lemon, bro. Like, all right, ES, ES and NQ looking really good. So keep an eye on ES. So what we want to do is mark off the bottom, right? So here's the morning bottom and the top. So the top we know is 4666.50. If we get a pop and close above it, we could go higher. But generally, once we have a contract rollover, we do end up having some retracement. So I'm thinking we might pull back to like 46.40. I'm not sure if we'll fill the gap completely today, but if we could, great. If not, then we just play and take what we can take. All right, 1-2 trades, call it a day. Thank you. Took a page out of Mr. Sean Deck Mark's page, show up while a little under the weather.
That was Occidental CEO Vicky Holla earlier on Squawk Box, talking, of course, about their decision to buy Permian producer Crown Rock. Now, the overall price tag is $12 billion, but 9.1 billion of that is new debt. They're going to also issue
All right.
1.7
So,
billion of
real
common
quick,
equity,
okay, damn.
and then also assume 1.2 billion of Crown Rock's.
Oh, TiVo, my brother, where you been, bruh? Where you been, TiVo? Hope you had a good holiday, bro. You've been missed. Right? Where's my guy been?
Obviously, as well for Exxon with its decision to buy Pioneer.
The boys are back in town. Lurking, not saying nothing, not saying what up to your fellas, bro. Nah, man.
If WTI stays around $70.
All right, here we go.
So a lot of industry consolidation and pressure to get bigger.
All right, here we go. Here we go.
It looks a little pricey.
6 seconds, 6 seconds. Let's get ready.
$83,000.
Let's get ready to rumble. Okay. Ooh, nice spike and drop on NQ. Yes, okay. Let's scale in short here on NQ. Come on. Oh, baby girl, don't do that. Whoa. Whoa. Oh, yes. Come on, baby. Come on down. Come on down for me. NQ just... What do you want to do, baby? What do you want to do?
Order filled.
Short NQ. Come on.
Order filled.
Nice. Let's go. Nice little drop. Keep pushing. Keep it going, baby. Keep it going. I am short NQ, ladies and gentlemen. Come on. I would love a drop down to the daily lows of 16,256. Possibly break the low. Seeing divergence. Look at the Dow. Good Lord. All right, so we got some clear divergence. Dow Jones just made a new high. ES is looking weak. NAS is kind of going a little sideways. I have to. Come on, B. Don't do me like this. Come on. Get my weight up with my... Okay. Oh, I'm not liking this. Come on, NQ. Stop playing.
Even in North America here, but a lot of the analysts say that it's being underappreciated. And even in places like China, where the consumer spending outlook isn't all that clear, Nike is still
Tupac, wow.
taking share.
Bro, the Dow is just ridiculous. So Dow's made a new high. As long as NQ does not make a new high, we should be good to the downside, but I'm probably going to downsize my position. It's breaking out. I'm not liking this. Come on.
when they looked at the
Come on,
revenue
bro.
performance during the Summer Olympics, they see a several hundred basis point lift in the 2 quarters leading up to the Olympics and during the Summer Games. So another potential catalyst for Nike there ahead of earnings. Stocks up 1.5% here at you.
Yeah, a few constructive calls. Rosenblatt on Spotify. They doubled
There
their
we go.
target
Come
from
on.
50 to 300
Come on.
by.
Come on.
Of course,
Come on.
last week brought the news of the layoffs.
Come on, bro.
Some 17% of Spotify's workforce, despite the fact that the shares have done extraordinarily well this year.
Yeah, they say that could be either read as scary or promising. That
Oh, yeah,
analyst note,
playing.
right? What Spotify sees it could foretell.
Ah,
rising
NQ
slowdown in
breaking.
profits and sales growth, but they take the other side and say that if sales and jobs are strong, then this is going to be very good for earnings and for margins. And so they.
I'm about to get stopped out on NQ, ladies and gentlemen.
That's still a big climb, about 50% from where we are right now, even though, as you say, Spotify's already had a 150% up year.
Did want to hit Elfrey Harris, if I can. You know, sometimes there's activism that we don't report on, in part because it happens behind the scenes, and in this case, that appears to have been the case. D.E. Shaw press release this morning out from Elfrey Harris. They named 2 new directors to their board. Kirk Pachigian, he's the former chair and CEO of Gelwin Holding, but also of Cooper Industries, which was sold to Eaton, I believe, under his watch.
Sheesh.
Bill Swanson, retired chair and CEO of Raytheon.
Okay, stop out.
Who's 74 years old. He was CEO of Raytheon from 2003 to 2014, chairman from 2004 until he retired as well in 2014. So you get 2 new directors there, and it appears as well they've entered into a cooperation agreement with D.E. Shaw, which they say is currently one of the company's largest
I
investors.
just had to do
Pursuant
it
the
one more
agreement,
time.
D.E. Shaw and Elfrey Harris will agree on one additional independent director to be added to the board next year. And as a result of that, D.E. Shaw has entered into
NQ new
customary
highs.
voting and standstill provisions. But D.E. Shaw's kind of a quiet activist. They were
I'm
involved
gonna
in
mark
Exxon
off
first go around
this.
there in terms of changes to the board of directors before Engine 1.
Don't do me like that. Do not do me like that. Like, really, bro, you're gonna run these highs and then flip?
Ticking up a bit.
The disrespect, bro.
They will now have 14 directors. 13
Wow.
will be
Y'all
independent
some dirty, dirty mofos.
board. Sarah.
It's the second best performer in the S&P. The first is
Outrageous.
Cigna,
Oh,
which
I am
is
outraged right now.
14.5%.
Look
You
at this
mentioned the
bull.
abandoned deal for Humana, the new $10 billion buyback.
Yo, bro, come on, you. Yo, oh my God. Wow. All right, NQ. Bruh, like, are you serious? Are you serious right now, bro? It's all right, man. This is part of it. Like, the manipulation, the, you know, timing was off. It's all good. Note to self. Wait 5 minutes after the open.
Very much opposed, at least some. Very much opposed to the idea of a stock-based deal under which Cigna would have done that, and they're very happy that now that the company has changed its tack, going to be devoting a lot of its cash flow to buying back stock, which, as you just said, Sarah, they're doing. And so a lot of it an accelerated repurchase that will take place as soon as the first quarter of 2024, Carl.
There's been a lot of succession news last couple of sessions. On Friday, you had Chip Berg leaving Levi next year, Spotify CFO, the Crown Castle CEO. Today, the Journal points out that Stephanie Pope named COO of Boeing.
Bruh, it's all good, it's all good. All right, let's see. Let me take a look at. Let's see. Okay, Tesla's coming down. Ooh, what? Come on, look in the video. Look in the video. Bruh, nah, this shit's going down. This is bull. Look at this. Every single one is massively dumping. Yo, they playing with us. They are playing with us. Wow, yo, they're really testing us. Amazon's coming, bro.
When I think of money,
Cut the crap. Cut the crap.
yeah, no, I think of Carl and Sarah.
Wow.
Oh, they do. They move markets.
Right.
I wish they'd gone with my idea, 7 stocks. You know, 7 stocks.
Order filled.
Fuck this bullshit. Let's go.
Dollar yen.
Reshorted NQ at 16,140. Like, nah, bruh. Y'all playing. Come on. Cut the shit. Like, just look at this. Tesla's dropping. Nvidia's dropping. And, yo, Nvidia could possibly drop all the way back down to 462 and lower. Don't do me like that, bro.
They rallied though last week.
Yeah, and today, TD Cowen names NVIDIA one of their best ideas for 24, target of 700. They named Snow another best idea. Interestingly, we are going to get some switch outs in the NASDAQ 100. Look at names like eBay today,
It's leaving.
Lucid, Zoom are all getting cut. And then names like Dash and MongoDB getting added with some positive gains.
Yeah, we'll watch that rebalancing. Look, the NASDAQ 100 is up 48% year to date, which I think tells you the story. NASDAQ Composite, which is a little broader, but also encompasses a lot of these names, up 37% year to date. And there's the AI tailwind, which we do wonder how much will carry into 2024. You know, if a lot of the good news is baked in, I think it's just hard to tell, right? We're going to start to look to monetization of AI in names other than just NVIDIA and Microsoft.
We are.
We've seen that.
That's
We are.
ridiculous.
And then the larger question, Sarah, that I know you're going to be following and we'll talk about for years to come is the productivity gains potentially that will.
And I believe quad witching. So rollover.
From the implementation of various generative AI software within the enterprise.
Across industries. I mean, is it going to help energy companies? Is it going to help financials? I think if Jim were here, he would note the move in financials, which is higher this morning and has been really flexing some strength lately. Financials as a group, which he says obviously is good for them and good for overall economy.
So yeah, so today contract rollovers and I believe quad witching. Quad witching is basically options option contracts expiring like on a bigger scale, so that is going to cause these massive up and down movements.
Look a little befuddled in that picture, don't you think? Like,
I think you're about to make a call.
you know what? By the way, I've gotten a couple of calls back that would have potentially helped me with this current favor report. It's on
Possibly.
Paramount. I'm also going to have something at the end on the Endeavor sale process, so stay tuned for that. But let's start on Paramount. It was Friday, actually, that Sarah and I were on air when I talked about finally having to make some phone calls because reporting that indicated at least there was a good amount of action around the idea specific to David Ellison and Skydance and Redbird, the private equity firm, and the potential purchase of National Amusements control position.
Oh, look at this reversal on the Dow.
The stock moved up a lot on Friday. You can see it's adding a bit to its gains right now. And I again, I may have even more based on a couple of callbacks that I've gotten. But at this point, based on a number of conversations with people close to this situation, it does appear that the level of conversation involving Paramount in some way and its control shareholder, National Amusements, led by Sherry Redstone, of course, has increased. There certainly does seem to be more conversation. There have been no offers made of any kind at this point. And, for those of us who've been covering this company for so long, sometimes it's hard to gauge conversation leading to offer or how serious things are. But this does appear to be a bit more serious than in the past, perhaps. Whether or not we actually get some sort of an offer and or potential deal, perhaps
just nasty. This is so illogical because all the tech companies are dropping. So it's like, bro, why aren't you dropping as well?
Is viewed as an important year. And when I say that, I'm talking sort of old media consolidation, the amount of money being spent on streaming by the likes of Paramount or Warner Brothers Discovery or our parent company Comcast with Peacock. There are those who believe that's got to come to some sort of end here, and consolidation at least might be one way to make it more palatable. But whether or not you actually see a deal remains unclear, and what the structure of said deal might be is also something that is yet to be really determined. Certainly, Sarah Redstone could decide to simply sell her control stake at a significant premium. And if you're Skydance and David Ellison backed by Redbird, that might be a transaction you're focused on, in part because it's relatively relative size would be a lot less certainly than buying all of Paramount. But it would also bring its own set of challenges, namely, all right, you do that, then you want to merge Skydance into Paramount, but it's still a related party transaction. It's probably going to require a special committee. In anything you did, or at least anything
I'm still in the
of
current short
significance in terms of
because I know a
changes
pullback
at
is coming,
Paramount,
and I'm not in heavy. Pretty much at the top.
a special committee. It's pointless.
16.
It could take a long time. It could be difficult. So there are those who say, well,
16,340.
you might want to consider just buying the whole thing. Now, there's not that much interest in all of Paramount. Would you be able to pluck out the studio? That's kind of a key question. And it's unclear whether that's the case. Otherwise, you got to buy the whole thing. The studio is by far the most sought after asset. Yeah, would Netflix be interested? They might be. Would our own company or Warner Brothers Discovery? Certainly Paramount on its own has value, but a lot of companies don't want to take on the linear.
Now what a nice reversal. Come on.
Operating company right now that could make a whole company offer without a huge amount of regulatory burden on it. But the question is there, hey, Zaslav,
I'm gonna wait to see about taking a short on ES.
You would be able to take on a streaming
It's
service
pretty much right now
which you're listening.
in the middle range, consolidating, going sideways.
Eliminate them entirely, make your own max offering more robust, but you'd still be getting bigger in linear cable, which is the last thing your investor base wants. So I guess I'd say a lack of clarity. Let me end with this. It does appear that Sherry Redstone, after October 7th, that horrific attack from Hamas and Israel, where she's always had a lot of focus in terms of her charitable work, both Israel and anti-Semitism, has become even more involved. Some have described it almost as a turning point for her in terms of how she may want to spend her days from here. And so that does lend at least some, I think, sense that, maybe there is more to this time around. Do keep in mind, there's all sorts of other things, double triggers on their debt, changing control, and then if they were to get downgraded, you'd need to refinance. That's not something that would be easily accomplished.
Come down.
We'll be following it. We'll be following it closely. Certainly next year does appear to be a key year when it comes to potential consolidations. Take a look at Redstone, at Sun Valley. All right, real quickly, guys, on Endeavor, that's a deal that is out there that we know there's interest from. It's 70+% voting shareholder Silver Lake. But I got a quick update for you because we came in today. Some people were hoping for we'd see an announcement of who the winner was on U.S. Steel, and we might even see an Endeavor deal. Here's my quick update. They're not close. They're not close yet. There's still due diligence going on from Silver Lake. They have not discussed price. They have not set up a special committee yet because, of course, no offer has yet been made. The business by business due diligence from Silver Lake continues. For those who'd hoped somehow that this would be a year-end deal, that does not appear to be the case. Perhaps a bid is made before the end.
Facts, yo. It really is. Like, look at the Dow, right? We ran up the highs, pulled back. ES, sideways, but Nasdaq is like, make this make sense to me. Like, how is Nasdaq pushing, making new highs when we have Tesla down on the day, Nvidia down on the day, Apple, Meta, Microsoft, AMD, like, bro.
REIT stocks have been moving up. All interest rate sensitive sectors have been doing well. We've seen, look at some of these momentum leaders recently. Boeing, the airlines have come back after a terrible first part of the year. Home builders are at new highs. Simon Property Group was at a new high. We saw some of the regional banks like Fifth Third move up. FedEx was at a new high on Friday. Ingersoll Rand was at a new high on Friday. You get the idea. It's a very, very broad market advance right here. For the week, as I mentioned, new high on Friday for the S&P. But when I talk to people about the biggest risks, some people think a bad inflation print with the CPI might be a problem. But most people think that the biggest risk right now is overall is the issue with where the Federal Reserve is going to be going and what they're going to be saying. So a lot of people think Powell's going to push back against these expectations of a rate cut next year. very heavily, and that could be the biggest risk to the markets right now here. So we're going to be digesting all that CPI and PPI data. Remember, we've got a 10-year Treasury auction today. Finally, Sarah and David, we're talking about Cigna's adding $10 billion in their buyback after abandoning the Humana deal. This has not been a great deal for buybacks overall. We've seen about $780 billion this year. That's the estimate for this year. Normally, in the last few years, we've been doing 800, 900.
Nasdaq is just ripping.
That's a little
Ripping.
important thing for buybacks
Wow.
is cash flow, and cash flow has been decent, but we are starting to see some issues, of course, with lower rates and higher rates this year. The first part of the year, I think, definitely affected where buybacks were going overall. So, guys, the important thing right now is whether or not we can continue to see buybacks low and cash flow high. If that happens, I think in 2024 we're definitely going to see a rebound in the buyback scenario. Guys, back to you.
Thanks. See you in a bit, Bob Pisani. As we go to break, let's watch bonds. As we said earlier, a little bit elevated today. 10-year back to 4.26. Obviously, you remember last week when we got into the 4.15 range.
That's a good.
Data headed our way today.
That's a good question. That's a very, very good question. Where is Nasdaq thinking it's going? No idea.
46.05. Don't go anywhere.
It's not far from it. It just came about 30 points away. Well, 26 points away from hitting the 400. Oh, come on. Yeah. Oh, where? What did you trade out the gate? If you took longs, shout out to you. Okay, awesome. Good stuff, bro. Okay. We seem to be topping out. Okay. Let me set some alerts on Tesla. And or below. Yup. Tesla. Here it comes. Tesla already hit it. Okay, we're looking good. We're looking good. NVIDIA. Damn. I'd have gotten rocked if I would have taken a short right out the open with no stop. Logicals.
Best idea in large cap. They point out the ongoing monetization of reels, overall usage trends around video, underappreciated AI capabilities, and ramping monetization
What
of
is
some of their
good?
messaging assets. Stock not enjoying a gain this morning, but we'll keep a close eye on it with the Dow up 22. Take a short break. Get back in a minute.
Yo, AMD vicious. Okay, Tesla. How do I roll forward contracts on what's Trado desktop? What's that? Do you mean Tradovate? On Tradovate, what you want to do is you want to double click on the chart or the dome that you have. Double click on it and it'll show like a little drop box, and then you're just gonna switch over to M. If it's NQ, you're gonna switch over to NQH4. If it's ES, it's gonna be H4. If it's the Dow Jones, it's gonna be H4, and so forth. Or just completely delete the old one and add the new one. The current NQ contracts are NQH24. Yo, NASDAQ is just hella disrespectful today. Right. It's good. CNBC playing.
Shares are just below.
Oh, nice. Oh, here we go. Here we go.
Microsoft announcing a new partnership with the AFL-CIO. Raymond Jabbers is in D.C. with the latest. Morning, Eamon.
Good morning, Carl. It's a big labor deal. It's happening just in the room off to my left here at AFL-CIO headquarters in Washington, D.C. Microsoft and the labor organization announcing a new partnership here that they say is designed to focus on worker rights and responsibilities in this new era of AI. The whole fear of massive unemployment related to AI is what they're addressing here in the room. Specifically, the two organizations say there are three elements to this partnership. Here's what they say that they're going to do in the coming months and years. They're going to share AI information.
Dow is looking a little weaker. Looking for the Dow to break below this morning's lows. The Dow gets below here, it's a wrap. Come on, at or below, create alert, voila.
So that envisions real feedback from workers who are using AI to the people who are developing the product as well. And then they're also going to talk about helping to shape public policy that supports the technology, skills, and needs of frontline workers. So that is the overall policy environment in this country in terms of AI and workers. And obviously, guys, we are coming off of a very big year for big labor. A couple of labor leaders in the room here for this announcement. UAW's Sean Fain is here, coming off of a big win for his workers. Also, some representatives of SAG-AFTRA are in the room today as well in the wake of that Hollywood writers' strike. So there's a lot of mobility here behind big labor going into the
Dow Jones getting weaker.
era of low unemployment. They're determined now to make sure that that era of low unemployment stays in
This
place.
could be it.
The era of AI, guys. Back over to you.
Looking back to Senator Schumer's confab on AI a few weeks ago, where they invited Randy Weingarten of the Teachers Union. And I can't decide whether this is somewhat theatrical or if they're actually trying to help labor drive policy long term.
Well, I think it's both. I mean, Liz Schuler, the president of AFL-CIO, said she was also at that AI confab up on Capitol Hill along with Elon Musk and all the other leading lights.
There we
in
go.
AI.
Look at
For
NQ.
Microsoft, look, this does help in terms
Oh,
of
here comes
publishing
NQ.
AI efforts to say we're not trying to kill jobs, we're trying to work with labor. But there is a theatrical element to all of these. There's a performative aspect to it, and we're seeing some of that in the other room right now.
Yeah, especially with questions about whether AI will replace labor. Thank you very much, Eamon Javers. When we come back, more
Uh-huh.
Professor Jeremy Siegel on his outlook for stocks.
No, okay, I'm about to say, bro.
Kind of hanging there unchanged. The Dow down 4 points right now. S&P little change, but that is masking some of the strength we're getting in certain sectors. For instance, consumer staples, healthcare, industrials, and financials are all higher. We'll be right back.
Just scaled in short on ES at 46.57. Hmm. Okay, one last pop and see if we're dropping. Bruh.
CNBC.
To another hour. Walk on the Street. I'm Sarah Eisen with Carl Quintanilla and David Faber live from host night at the New York Stock Exchange. You probably noticed our screen looks a little bit different today. It's all part of our new look here at CNBC. We're excited to bring it to you. Some information and data might feel and look a little different, be in a different place than the last time you joined us. But over time, we are hoping that it makes it easier for you to understand the markets and the stories that we are bringing to you. Let's turn now to the markets, show you what's happening. At the index level, not a whole lot. The Dow is kind of a little unchanged. United Health, Microsoft, and Apple are weighing on the Dow. Honeywell, Amgen, and Home Depot are helping the Dow. So a bit of a tale of mixed sector performance right now. You're seeing weakness in technology, strength in staples, healthcare, industrials, and financials. Check out treasuries. They take a step back after a pretty giant rally we've seen over the last 6 weeks or so. Yields firm up, 10-year, 4.264.
I'll take this loss.
Of issuance in the next 2 days, 3-year, 10-year, and 30-year bonds over Monday and Tuesday. We'll be watching those auctions. We're 30 minutes here into the trading session. Here's some movers we are watching, and a lot of M&A action. David's been busy. Occidental Petroleum announcing plans to buy Permian oil producer Crown Rock for $12 billion, raising its quarterly dividend to 22 cents a share from 18 cents a share. Not digesting it particularly well in the
All right.
market. The stock is down 9%.
Minus 150 on
Cigna has
ES.
abandoned its pursuit of Humana after a disappointing, sorry, that was a year-to-date 9%, after a disappointing response from shareholders. The companies reportedly couldn't come to an agreement on price and other financial terms. The stock is down about 10% since the Wall Street Journal, remember, first reported that the companies were discussing a combination. And then watch here's Macy's today, surging double digits
Look at
after news
that.
that the companies received a $5.8 billion buyout offer, valuing the retailer at $21 a share, obviously surging on that news. Guys, it's a huge week when it comes to potential catalysts and events. We're going to get so I mentioned the bond auctions that are happening. We'll watch that. I haven't been as focused on it lately, but the last time there was a 30-year auction, it was a little disappointing and it caused some trepidation, some nervousness across the markets. We're also going to be watching central banks. This is a big week for it. The Fed is out on Wednesday. We get the Bank of England and the ECB on Thursday. We're going to get some emerging market central banks as well. The Bank of Japan is the following week. But nobody's expected to hike rates anymore. So that marks a big change from where we were. And then on the economic data front, Carl, CPI on Tuesday won't get a Fed reaction because they're firmly in quiet period in their 2-day meeting. And then PPI the following day. Retail sales also important as we try to figure out how strong the consumer really is and whether we can get away with no recession.
Yeah, the general take lately is that it's pretty solid. We'll see some of the surveys indicating holiday spending activity continues to be strong. Cheap gas is a big part of that. Median price of gasoline in this country is now $2.99, first time since 2021. Nat gas down 7% this morning, worst day since March. So definitely a deflationary effect when it comes to energy. China may be a part of that. CPI over the weekend down 0.5, looking for down 0.2, and that is the biggest drop in 3 years.
Yeah, glad you mentioned the deflationary read in China. PPI was also lower, and that 0.5% lower on the year-on-year number, I think is surprise and also just fuels concerns about demand in China and what's happening there. It's also moving from goods to services in China in terms of the pricing pressure. Stocks, though, turned around in China. They actually rallied on this idea that, hey, maybe they're going to actually do something about it. We did get the Politburo meeting last week, at the end of the week. No major headlines out of that, but I think comments suggest that they could be targeting 5% growth again next year, which means that they might have to add more fiscal stimulus. Although, remember, we got that Moody's warning last week on the outlook for Chinese debt, on this idea that they are going to continue to fuel stimulus. China's going to be a question mark next year, I think, in terms of the economy and the markets. The chart I made for today was actually on U.S. inflation because we're going to get the CPI number, we're going to get the Fed meeting, they've been targeting inflation, and no matter how you look at the inflationary numbers, and this looks messy, but all you need to know is that they're coming down. The disinflation is real. And remember that we were trying to figure out, has inflation peaked? Is it really coming down? The trend is very clear. I mean, you look at everything here from core CPI, which the Fed looks at, to some of the regional indexes that track inflation, Atlanta, Cleveland, the sticky core, the super core, the Dallas Trip median price. They're all showing that we are past the high point, clearly, of inflation. But now could be the hard part, where we get all the way back down to target. Some economists are saying we'll get there by next year. The Fed, in their last projections, which came out in September, don't see it happening till 2025, getting down to target. Well, they revised that because inflation has surprised in a good way, coming in lower. That's going to be one of the questions this week.
Yeah. Earlier it said the big event is the Fed meeting on your graphic, but is it a bigger event than getting the CPI number?
It's a big event, yes, because we get the projections for rates for next year, which is going to be new and updated from their September thinking. We're going to get the tone from Powell. He sets the tone. Is he going to talk tough and try to reverse some of the looser financial conditions we've been seeing? So I think it's important because he will also be able to react to CPI.
Right.
Which
Although
is why
if we get a hot CPI number, the market is going to react to that.
Like that. And the Fed might react to it too. That's the thing. We got lower unemployment than expected. Right, 3.7% was a surprisingly good number. Wages were going strong. And then a firmer CPI could lead the Fed to talk a little bit tougher. That's one of the big risks this week, for sure.
Fed meeting does come as the Dow and the S&P come off these fresh 52-week highs. NASDAQ highest level since April of 22. All three major averages with this 6-week win streak. Joining us on the news line today, Wharton School Professor of Finance Jeremy Siegel's with us. Professor, it's great to talk to you. I was struck by the nope, that's not the professor, but we'll get to that in a second. This journal piece over the weekend saying the Fed can't put off prepping for rate cuts because if you got productivity at 4 and productivity at 2, wages at 4, that kind of puts you near target.
Yeah, absolutely. And, I heard Roger Ferguson, who I respect a lot, on the 6 o'clock hour, and he said, that could be a problem for 4% wages, but 4% wages is absolutely not a problem when you have 2-3%, and actually had over 5% productivity growth there in the third quarter. So, yeah, the unit labor costs have been going down. So that should not be a problem for the Fed, and I absolutely do advocate that they start thinking about lowering it. I don't think they're going to do it on January 31st, certainly, but they should think about uninverting the yield curve in their March meeting.
Why do you think? To what degree are the market's jitters about either a warm CPI or pushback from Powell? Are they justified to any degree this week?
Yeah, honestly, I think the dot plots are going to be hawkish. I don't think they're going to be right. I think they're going to be too hawkish as developments do, but that could unsettle the market. Yeah, we will have to see CPI and.
Come on,
and
bro. You make no sense over here.
So nothing that happens tomorrow. The dot plot is going to move. That's not going to change either.
Y'all got any questions while we wait, man? This is going to be an all-day thing, it seems.
The tone of the news conference on Wednesday that Powell does, depending on what those two factors are. And by the way, he has cover. The fact that the unemployment rate moved away from that 4%, which I think would have been politically not a good thing, down to 3.7, gives him more political cover in a way to be hawkish. Because unemployment is still under that 4% level, which is, quote, politically acceptable.
Speaking of politics, I've heard in a lot of, cocktail conversations, well, Powell's going to cut rates more and he's going to do it faster next year because he doesn't want Trump to get elected again. I know that the Fed is very apolitical. They would never do anything like that. But there is an election.
Shit's moving like a freaking penny stock.
Whether you're going to tie it to Fed policy or not. And I do wonder how that's going to impact the markets next year.
Sarah, you're absolutely. The Fed is a creature of Congress. It was created by the Federal Reserve Act. Congress can take away any of the powers of the Fed it wants to. And so, they got to be conscious. And truth be known, don't forget they still have a dual mandate. It's not just inflation. It is inflation and employment. So it isn't like he's abdicating all his responsibility. And when we take a look at commodity prices, as you mentioned earlier, going down, yes, there's going to be some stubborn parts of inflation, core inflation, that are going to continue. But,
killing the trade.
What would you rather have, 1% less on the core over the next year, or another 500,000 people unemployed? I think the choice is clear, and I think he has to recognize what that choice is.
So you think the market, which is now expecting 100 basis points of cuts, no matter what the Fed forecasts in its dot plot this week, is more correct?
Well, take a look. 12 weeks ago in September, a majority of the FOMC said we're going to have another raise by December, by this week. And now that was wrong. And that was just 3 months ago. So, we're all going to take a look and shudder at, oh, my God, they're only predicting 2 cuts or 1 cut or 3 cuts. But the truth of the matter is, do you think they're going to get it right over 12 months when they got so wrong over the last 3 months?
I want to talk to you about something away from the markets, but since you're at Wharton, the Liz McGill resignation, the Penn president, which developed over the weekend, I'm curious what your reaction is to it, as well as the chair of the board stepping down.
Yeah, I really, I was very upset by the response. I think everyone was. It was more than tone deaf. She was given several chances to say genocide is unacceptable and not in context. And, when you say that, I see no way to survive. You have to go on. I'm not going to speak to Harvard. I'm not at Harvard or MIT, but it is a problem that
Damn,
has
Tesla
been
made a new
eroding
low.
good elite universities for a long time, and I think they've been called on it.
You think something deeper is broken? I mean, it's a step to see her resigning, but I'm curious
Yeah,
from your
I
perspective how
think
pervasive
they've been
this
broken.
problem is. Yeah.
I think the problem has gotten a lot worse over the last 5-10 years. There's certain speech that's politically acceptable, other speech that is not, and they don't. You have to have a consistent policy on it, and maybe this will jolt the universities back into what they should have always been doing. I hope so. In any case.
Professor Siegel, it's David. Do you see a change in the classroom? Do you think
Well,
twice
I
before you say
actually-
certain things, or no?
I retired from active teaching 2 years ago, so I still do special programs at Penn. But I have not seen any changes in the classroom. But and particularly, Wharton was not as affected as the other parts of the university in terms of what you could say, what you could not say. I always felt it was a little bit freer than perhaps other divisions of the university.
Professor, appreciate you entertaining those questions with a thoughtful response. Definitely a
Thank
big
you.
topic of discussion over the weekend. We'll talk soon. Jeremy Siegel.
Absolutely. Thank you.
As we had to break, our roadmap for the rest of the hour. Yields pushing back higher today, what the bond market is expecting from the Fed, inflation, and rates.
Plus, Big Pharma's fight against fraud, the big money that's involved, and who's at risk. Got some details this hour.
And after the break, an exclusive that you're not
Boring. Yep. Slow grind up. Slow grind up.
We have a lot more squawk on the street for you straight ahead.
Facts. Hmm. Hmm.
Welcome back to Squawk on the Street. Let's get to Frank Holland this morning at the Hope Global Forum in Atlanta with a very special guest this hour. Morning, Frank.
Here at the Hope Global Forum, the annual event for Operation Hope, a big event for financial literacy and financial to wellness, and I'm joined by Delta CEO Ed Bastian, who's here to take part. We're going to be doing a panel in just a short time with John Hope Bryant to talk about Delta's programs. Thank you so much for being here with us.
Great to be with you, Frank, and thank you for your support to Operation Hope. It means a lot.
I want to talk about your support for Operation Hope and also what you're doing to support your employees. You're launching a new financial wellness program for your employees where employees can actually be given. They can earn $1,000 if they go through one financial wellness track. Explain what you're doing and why you decided to do it.
Well, one of the things that we learned out the world during the pandemic is our focus on wellness was never more important. And we want to make certain as we're coming out of the pandemic that we're taking the very best care, not just of our employees' physical health, their emotional well-being, their social well-being, and of course their financial security. And the issues around financial insecurity kind of sit at the foundation of a lot of other issues as well. There are a couple of stats that are prevalent out there in terms of the lack of Americans who have the ability to handle a financial emergency. 1 in 4 Americans do not have any capability to handle any kind of emergency in a financial standpoint. And over 57% of Americans do not
Isn't you
have
finally
$1,000
ready?
that they could put their hands on in the time of emergency at this point in time. And when I saw those stats a couple of years ago, I talked to John and we said we need to do something about this. I want to make certain that
Wrong partner.
100,000 employees in Delta are in that condition. So we've instituted
Not quite yet.
financial wellness program that we're going to be unveiling.
Not quite
First
yet.
year results that we've seen. We launched at the beginning of the year. We've had over
This mic is
30,000
just, this is
sign up,
mind
take
blowing.
financial training for financial literacy. You sign up and you finish a track with a coach. You get $1,000 put in your name, no strings attached, to handle any financial emergency that you want. And over 20,000 more people have already concluded that.
So Delta, obviously part of Operation Hope's financial literacy for all program. You're a proud member of that. I want to talk about your business now. We're in the holiday season right now. Give us a sense. What do you see when it comes to holiday travel?
take
What do
a
you
look
expect as we get
at-
closer to the end of the year, where obviously we have Christmas and a lot of New Year's travel.
Well, as many people that were traveling during the Thanksgiving break saw that people are continuing to travel. The demand for travel keeps. We saw more travelers during this Thanksgiving break than we've seen in our history. Not just Thanksgiving, for any week of holiday peak travel. We broke the TSA pre-COVID level. Marks. The operational performance of the airline was amazing. For the 10-day period around the holiday, we had 50,000 operations that we launched. We had less than 20 cancels, over 90% on-time arrival, and that demand is kind of now getting us set for a Christmas break that I think is going to be equally as strong.
You also recently reaffirmed your full year guidance. One part of reaffirming the guidance was talking about business travel. What do you see? What are you seeing when it comes to business travel? Of course, we have the pandemic where it ground nearly to a halt. We've also had the rise of hybrid work and Zoom and things like that. As we look into 2024, what's the state of business travel?
Well, managed business travel, which is the traditional business travel, continues to improve. And post the Thanksgiving break, we saw another step up, maybe another incremental 5%. So the volumes continue to work their way back. We're probably somewhere about 20% below where we were pre-COVID levels on managed business. But the thing that people miss is that while people aren't traveling for managed business, they're traveling on the road at a much higher level because mobility has been at a premium because of hybrid opportunities to travel and work and bring your office with you. So in aggregate, my view is business is far above anything we ever saw pre-COVID. We're just managing and looking at it differently today.
Let's also talk about international travel, a higher margin business for you. Over recent weeks, we've seen a lot of geopolitical tensions, whether it's the Israel-Hamas war or other issues around the world. How is that impacting your international travel business?
Well, international had a great year. And I think coming up in 24, it's going to have another strong year. People had 3 years to plan their trips. And when they finally got the green light this year to go internationally, felt comfortable going, they went. Of course, we're watching what's going on. Watching what's going on in the Middle East and the challenges that presents. People are relatively resilient, though, in terms of travelers. So we're watching with a cautionary eye. We don't see any pullback.
Before we let you go, I do have to ask you about a personal question. Sky Miles. Yeah. A lot of changes. You made changes. Then you kind of changed them back. What kind of response are you getting for your Sky Miles program? What feedback are you getting from your customers?
Well, we made changes and then we
modified the changes, and I think we're in a pretty good spot now. We have more premium customers than any airline in the world, and we've seen such a continued demand for our product that's outstripped our capability to serve effectively. And if everyone is in line standing into the Sky Club, that means no one is effectively a premium. So we needed to make changes. I hated making some of those changes.
Are you done?
We're done. We're done. We're
This is
done.
going to be it from now on.
This is going to be it for as long as I can tell. And we'll monitor it. I think what we wanted to do is we wanted to enable our premium customers to have a premium experience on Delta. And that's our goal. We're continuing to build more clubs coming, more premium seats coming, more premium lines for travelers to call into. But until we could get caught up on the supply side, we had to do something on the demand side.
I think a lot of people want their status at Bastion. Those changes, very interesting. Carl, everybody back in the studio. Tosser, back over to you.
And I will take it, Frank. Thank you. And thanks to Ed Bastian as well. Let's go to a quick break here, but check out the biggest laggards thus far this morning. And what do we have? Almost an hour of trading. Meta leading that. Of course, you can see Paramount as well, giving up a bit of the gains that it saw on Friday on those stories about conversations that we talked about this morning as well. Yes, they are conversing. No offers have been made. Next year, certainly early in the year, will seem to be crucial for the future of that company. We're back right after this.
Yo, NVIDIA. Wow. Mm-mm. Do-do-do-do. Okay. Pull back for the London close, possibly. Taking a short on the Dow. Second 30-minute candle rejection below the highs.
Welcome back to Squawk on the Street. I'm Dominic Chu. It's a relatively quiet start for the week for stocks, with the S&P just wavering between positive and negative territory so far this morning. We are taking a closer look, though, at the energy sector on the heels of another big M&A deal in that sector. The Occidental Petroleum is buying privately held Crown Rock, which operates in that West Texas Permian Basin. The deal is worth roughly $12 billion on a total enterprise basis and will be largely financed through debt and common stock. It will add about 170,000 barrels of oil production per day to Occidental. Now, Occidental is also hiking its quarterly dividend to 22 cents a share from 18 cents beginning next year. Shares of Occidental right now higher this morning, just by about 1% or so. Elsewhere in energy, natural gas producers are under pressure. That includes names like Williams Companies, also EQT, ONEOK, Target Resources, producers, pipeline operators. Those moves come as natural gas hits their lowest levels since June. And oil prices are slightly lower this morning after being both WTI and Brent posted their 7th weekly decline. Right now, West Texas Intermediate trading just below $71 a barrel.
All right, do y'all have any questions for me? Only got a few minutes left before I jump off.
Downtown to you folks at the New York Stock Exchange.
Don, thanks very much. Still to come this morning, stocks are riding that 6-week win.
Yo, Tesla still dropping. Come on, bro. Nvidia still dropping. Meanwhile, freaking Nasdaq is still up here. Like, bro, stop playing. Like, this is just stupid. Bruh. And again, just something to remember. Today is quad witching, so yes, it does. It affects every single area of the market. Because remind you, futures is based off of the indexes. So yeah, quad witching happens 4 times a year. 4 or 3 times a year. Here it comes. Oh, you mother. Tempted. Look at it. Finally. Oh, now y'all want to act right? Try 161. Can I get it? No. Come on. Stop. Stop playing. Stop playing.
Order filled.
Short NQ. This will be my last one for the day. Just give me 3 even, bruh.
Welcome back. I'm Silvana Hanau with your CNBC News update. Rudy Giuliani will be on trial today in a Georgia defamation case involving 2 former election workers. He was already found liable for defaming them when he said they committed fraud in the 2020 election. Now the jury will determine how much Giuliani.
Could you explain what that does? So quad witching happens about 3 to 4 times a year. I want to say 4, like where contracts are expiring. So when contracts are expiring, we end up having a massive influx of volume up and down. And as you can see, we're having that today where Nasdaq is just pushing while all the other tech sectors are red on the day. Like Nasdaq should be negative, but it's not. So quad witching, look it up. It's when option contracts are expiring. No, it's not only on Fridays. And because of the holidays, like it is affecting, like there's been times where like it's happened in midweek. So it just depends on the day of the month that it falls under. So go to investing.com. There's other places that you can literally check like when is quad witching, and it'll tell you the exact dates.
Sent to Vanguard this morning with the subpoena, Jordan wrote that Vanguard appears to have entered into collusive agreements to decarbonize its assets under management and reduce emissions to net zero in ways that may violate U.S. antitrust law. Now, a similar letter was sent to Arjuna Capital as well.
All good, all good. Yeah, gold, nice drop this morning. Missed. Look at just lower high, lower high, lower high. This is what is referred to as a dead cat bounce, right? So we drop, lower bounce, drop, lower bounce, drop, lower bounce, drop, lower bounce, and then whoop.
Giants BlackRock and State Street is related to this investigation into antitrust and ESG, although neither.
All right, 10:33, ladies and gentlemen. That's it for me. I canceled the sell limit that I had on ES. I have a small micro NQ running. That's gonna be it for me. So let's see if this thing plays out. If not, I'll try to tap in later in the afternoon just to see if I can catch a couple scalps to regroup and maybe get green on the day. But if not, I'm just gonna let it be. So thank you for joining. I'll see you guys tomorrow. Hopefully I'm a lot better then. Stay green if you're already profit on the day. If you haven't taken any trade, just wait for the setup. Peace, y'all.